After seeing those powerful simulator results, you might be thinking this sounds almost too good to be true. Well, today we're going to help you figure out if the offset mortgage is right for you or if there's another path to mortgage freedom that better fits your situation. We're going to do something really important. Instead of just telling you which loan is better, we're going to help you make the choice that's right for your situation. Remember those simulator numbers we just saw? Pretty amazing, right? But let's make sure we're choosing the right tool for your financial journey. Now, I've been pretty tough on the 30-year mortgage, but let's be fair. It does have its place. Think of it like training wheels on a bike. Sometimes you need that stability while you're getting your balance. And let's look at the advantages. Those consistent, predictable payments, well, they're like a financial security blanket. It's basically on autopilot, set it and forget it. The qualification requirements are more forgiving, and those lower down payments, they're often the difference between buying now or waiting years to save. But we also need to talk about the flip side. Remember that shocking interest total we calculated? That's still there. Your equity builds up slower than molasses in January. You're pretty much locked in unless you refinance. And there's that psychological barrier. Once you get used to those lower payments, it's hard to imagine paying more. Now let's talk about our financial Ferrari, the offset mortgage. You saw those simulator numbers. Cutting a 30-year mortgage down to 6.3 years, that's not magic, it's math. The advantages are powerful. Your money works overtime fighting interest charges every single day. You've got that financial flexibility we talked about. Everything's in one place, no juggling multiple accounts. And of course, that accelerated payoff potential. But, and this is important, it's not for everyone. You need rock solid financial discipline. You need a debt to income ratio under 43%. You need to have 10% of your line of credit in reserves. And you need a credit score of at least 700 or better. Now, let me answer some questions that I know you are probably bouncing around in your head right now. What comes with the checking account? Well, the answer is simple. Everything that comes with any other checking account. ATM, debit cards, checks, bill pay, account transfers, direct deposit, mobile banking, and customer service. So why doesn't every bank or lender offer something similar? Well, unfortunately, mainstream banks may view this program as a threat to their ability to leverage customer deposits. And many lenders lack the determination to market a product that requires so much more consumer education than traditional financing. So, how does the lender offering it benefit? Well, the offset mortgage loan has proven to lower the risk of borrower delinquency and the default compared to traditional loans, and it develops a much longer lasting relationship with the consumers because of the way the credit line stays open for so long. Now, can it be used to finance investment properties? Yep, it can be used for financing primary residence, second homes, and investment properties. You'll just need to check in with the bank licensed loan officer when you get to that point. And aren't adjustable rate mortgages risky? Well, for cash flow positive borrowers, it's designed to generate savings even if the rate rises, because the key to lowering the cost of borrowed money is reducing the total amount owed. Well, isn't my low mortgage rate better? This is a question I hear often. Now, that's going to depend on your management of your income and idle cash. If you routinely spend more than you earn and you use credit to supplement your expenses, then a standard traditional loan may be more suitable. If you're a cash flow positive and possess financial discipline, the offset mortgage loan will offer life-changing benefits. Now, is there a balloon payment? This is a simple answer, no. Who will service your loan? Well, the bank that originates this loan for you is the same bank that will service the loan. Should I put all my extra income into it? Well, unless you can earn more interest on your income in other accounts, it may make great sense for you to use most, if not all, of your extra income to lower your principal balance. Is the loan process similar to traditional mortgages? Yes. The process follows the exact same industry standards for application and qualification. This doesn't sound like a good fit for me. Are there any alternative ways I can pay off my mortgage loan fast? Absolutely yes. If the offset mortgage loan isn't the right choice for you, you can still take action to aggressively pay down your home loan and reduce your interest. In our next module, we'll share some alternative strategies for paying off that traditional loan as fast as possible. So, in summary, here's what I want you to remember. The best mortgage isn't about what's trending, it's about what works for your situation. Whether you choose the offset mortgage or decide to optimize a 30-year loan, you can accelerate your path to freedom. The key is making an informed choice based on your circumstances. So before you move on to our next lesson, grab your workbook and complete the mortgage choice worksheet. Be brutally honest with yourself. This isn't about choosing the coolest option, it's about choosing the right tool for your financial journey. Remember, again, whether you are that young professional couple making $160,000 or someone in their late 40s looking to supercharge retirement planning, there is a path to mortgage freedom that's right for you. Let's figure out which one it is.